If you think a bank vault is full of money, your biggest misconception isn't about gold. It's about what money actually is. That's not a philosophy lecture. That's the foundation. You think you know what lives behind that steel door. You think it's stacks of cash, bars of gold, mountains of wealth, compressed into one reinforced room. It sounds logical. It sounds like something you've seen in a movie. It sounds exactly like what a bank should contain. But it is wrong in almost every detail. There are three completely different things people confuse. First, a piggy bank. You put money in, money stays in, money waits for you. Second, a commercial bank vault. It holds some cash, some documents, and some physical items people rarely think about. And then, there is where the money actually lives. Not in metal, not in paper, not in a room with a combination lock. That is what we're actually talking about here. First myth: banks are full of gold. Gold does exist in the financial system, but not the way the image in your head suggests. The gold bars people picture, stacked floor to ceiling, glowing under dramatic light, those belong to central banks. Institutions like the Federal Reserve. Not your local branch, not your commercial bank. The bank where you deposit your paycheck has no gold. It was never designed to you. Gold in the central bank system is a reserve asset. It doesn't move daily. It doesn't fund your mortgage. It sits cataloged, serialized, rarely touched. It is financial geology, ancient, immovable, and largely symbolic. A dragon guarding treasure makes a better story. But the reality is an auditor with a spreadsheet. Second myth: your money is sitting somewhere, waiting. When you deposit money into a bank, you are not renting a safety deposit box for your dollars. You are making a loan to the bank. That sentence deserves to sit there for a moment. The bank takes your deposit and immediately puts it to work. It issues loans. It earns interest. It keeps only a fraction of what you gave it available as liquid cash. The rest circulates. The bank doesn't keep your chair. It rents your chair to someone else while you're not sitting in it, and it counts on the fact that you and everyone else won't need every chair simultaneously. This is fractional reserve banking. It is not a conspiracy. It is the operating logic of every commercial bank on the planet. Your balance is not a stack of bills with your name on it. It is a number in a database, a liability on the bank's books, a promise. So, what actually sits inside a typical commercial bank vault? Cash for daily withdrawals. Safe deposit boxes holding other people's documents and jewelry. Backup storage for negotiable instruments. Administrative records. That's most of it. The vault cash itself represents a fraction, a small, deliberately controlled fraction of the bank's total deposits. If you compared it visually to the full scale of money moving through that institution on a given day, the vault would look like a parking space next to a skyscraper. The real vault is invisible. Core banking systems, encrypted databases, payment networks, ACH rails, SWIFT transfers, card settlement infrastructure, running 24 hours a day. This is where transactions actually live. This is where your balance actually exists. The steel door is real. The combination lock is real. But the actual architecture of money is fiber optic cables and cryptographic protocols and interbank settlement systems that most people will never see, and almost no one thinks about. The modern vault is not built from metal. It is built from math. Here is the mechanic almost no one explains cleanly. You deposit $100. The bank keeps $10 in reserve. It lends $90 to someone buying a used car. That person pays the seller. The seller deposits $90 into a different bank. That bank keeps $9 and lends $81. The process repeats. $100 of original deposits becomes several $100s of circulating money. This is not fraud. It is design. Intentional, regulated, and centuries old. But it carries a structural tension that never fully disappears. What happens if everyone needs their money at once? The bank doesn't have it. Not all of it. Not even close. This is a bank run. It has happened before, and it will happen again under specific conditions. The entire system's stability is not guaranteed by the vault. It is guaranteed by confidence, by regulation, by the belief that everyone else is not panicking right now. When that belief breaks, the steel door becomes irrelevant. The money supply is actually layered. Physical cash sits at the bottom, a relatively thin base layer, small in comparison to everything above it. Commercial bank deposits sit higher, the familiar numbers in your account. Central bank reserves sit above that, moving between banks in amounts the public rarely sees. At the top, interbank settlement systems move sums that dwarf everything below. The vault you imagined is the ground floor. The building has 40 more stories above it. Most people never look up. Central banks and commercial banks are not the same thing. Your neighborhood bank serves you. The central bank serves the banks. It creates base money. Commercial banks multiply it through lending. The Federal Reserve Vault is not where your savings live. It is a completely separate system, operating at a completely different scale, for completely different purposes. Confusing the two is like confusing a city's water treatment plant with your kitchen faucet. They are connected. They are not the same. And yet, vaults still exist. For a reason. Cash logistics require physical storage. Armored transport requires a destination. Safe deposit boxes require a secure room. Regulatory compliance requires documented physical infrastructure. And beyond function, there is psychology. A bank with a visible vault signals permanence. Solidity. The vault door is partly a security device and partly theater. Both are legitimate. People trust institutions that look like they take security seriously. The vault earns that trust, even when the money it holds is a fraction of the whole. Myth. Rooms full of gold. Reality. Central bank reserves, rarely touched. Myth. Your money waits for you. Reality. It's been lent to someone else before you left the parking lot. Myth. Banks store wealth. Reality. Banks circulate it. Myth. The vault is where the money is. Reality. The ledger is where the money is. Here is the larger thing. Money is not a pile of anything. It never really was. It is a system of coordinated belief. Trust in digital records. Trust in regulatory frameworks. Trust in the institutions holding your data. Trust that the person next to you isn't about to run to the ATM and take everything out. The steel door is impressive. The steel door is real. But it is not what makes banking work. What makes banking work is the collective agreement, fragile, maintained daily, almost never discussed, that the numbers on the screen mean exactly what they say they mean. The strongest part of any vault isn't the door. It's the belief that you'll never need to break it open.